What is going on, everybody? And in this video, we're providing a state of the market and stock picks for September 22nd, 2022. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day in the week ahead in this glorious market. Now, today was the big day for rate increases, monetary policy, and Powell. It was a very interesting day. We've built all the way up for this day for the past couple days, and it did not disappoint. That's for sure. As you can see, we came in with another 75-point basis move. So after two 75-point basis moves, I have a very historic 3 in a row, and it does not look like we are dialing back whatsoever. Potentially pricing in another 75 and potentially a 50 before end of year. And that's saying that if nothing changes. Now, Powell pretty much reiterated a lot of the same things that he has been iterating since this whole time. His story really hasn't changed. And she's gone hawkish. He's been hawkish since. Today, he did bring up essentially the housing sector and rentals, and said that that whole sector hasn't even begun to see the pain yet. Something he's been talking about is that we haven't even begun, and something I've been talking about, we haven't even begun. We've only seen the beginning stages of what's happening. Now, coming in, I wasn't really sure 75 would do the trick. I know 100 would definitely do the trick. It's induced panic. But 75, I felt it could have gone either way, but more so the fact that just the way Powell represented everything and essentially saying that things were just going to get really bad, and that they weren't going to dial back, and that they were still keeping a 100-point basis move on the table, especially after 75-point basis moves 3 in a row. To still have a potential of a 100-point basis move is concerning. Whatever piece of information the market took, and it just started tanking in that last hour. We finally broke that level, essentially that 38.31 we've been holding all week. We finally broke that, and we're breaking this critical level. And now tomorrow, I'm kind of looking for us to retag this 38.15, and then consider a huge sell-off, potentially roughly around 80 to 60 points tomorrow is what I'm looking at. Second days are always the worst. Now, depending on how much we gap down overnight, second days are going to be very bloody. Things just are not good. And something I've said, now we're starting to see what's actually going on. The question is how are we going to start getting panic in the market? Or do we wait until earnings and then realize that things are worse than we thought, and then start seeing all the true data coming from earnings, which is just around the corner, or we get another core CPI that's still higher or barely comes down. If we get another core CPI that's over 8.3, 8.5, starts to creep back up, you're really going to start scaring the market at that point, because that means it's just not going to stop. You also have the Fed talking about they're going to raise interest rates to a certain part, and then to a certain rate, and they're just going to hold it there for a long time. You're just starting to see housing go over 7%, I believe, on interest rates, which hasn't been seen in an extremely long time. There's talks of 9, 10 in the next couple months. That's where we're headed. Again, we haven't even seen peak, and this is not priced in. At this point, it is not. Now people are starting to understand that we are in a recession. Are we going to hit a depression? Because we've been talking about recession for a couple months now. Or we're going to actually get into the depression, world recession, right? All these things have been talked about. The world itself has been getting torn apart. And we were just sitting here on our high horse pretending like nothing is happening. Now it's starting to show its face. Again, everything being said, I try to remain neutral. I will take this down to the next level. I said before we even the leg started making its way down, I would be watching this leg very closely, especially if we find ourselves at 36.36. If we break that level, that is my DCA buying level at that point. Now, again, average for a recession is about 43%. We can still fall another 20%, roughly from that 36, which is a whole other move than what we've already had. So that would put all your stocks, your Tesla stocks and everything else in the hundreds, right? It would significantly destroy a lot of these stocks. This is why these stocks did stock splits, so that they won't get hit as bad. We'll have to see on how much cushion these splits have done to help these companies, your Amazons, your Googles, right, and see what the stock split is really going to help. And Shop, but Shop's down at $30 now, right? It was almost a $2,000 stock just a couple months ago. So it's just hard to contemplate what is going on when you see these prices, and don't expect these prices to go right back, especially in a recession. What you're going to start seeing now is you're getting demand destruction. You're slowly starting to see that now. You're getting massive amounts of supply. NVIDIA said they had 2 quarters worth of chips. So all that back ordering from the pandemic, and now it's all in. Nobody wants to buy it because everything's so expensive, or they don't have the money or liquidity to be able to buy these chips. So now you have a massive surplus, and now they're going to have to take a massive hit in their earnings statement because they have to reduce costs to get them off the shelf for the next item that's coming up, right? And so these are things you have to consider. So this is why I'm talking about Q3, Q4, and then Q1 of next year. You're going to start seeing this. This is the butterfly effect that I'm starting to talk about. You're going to start seeing some really painful in that first earnings where we see the shock, we see breaks in these companies, or Tesla doesn't make estimates. That's going to induce panic. That initial misestimate is going to induce panic, and we're going to sell more from that point. So this is why I talk about if we do break 36, DCAing slowly, because it could continue to create a snowballing effect. What if one of the black swans play out? This is going to be another thing that's going to introduce more panic into the market. So we can dive pretty heavy. So just be mindful of that. I'm not trying to feed the storyline of that. Things have to continue to play out. So just watching those other things, those other potential black swans, we have to see where we land tomorrow. It's going to be important. Are we going to hit panic mode and just start selling? That is what I'm watching tomorrow. If we start really hitting panic, then we got strong momentum to break that 36. And then again, the next chip is going to be the next core CPI and then earnings. Again, if we miss expectations by a lot, this could be very concerning. It's considering a lot of banks have done massive layoffs already before earnings, a month out before earnings. So just keep that in mind. They're going to have to report all that stuff here in about a month. Then you're going to see what the true story is. So again, I'm not trying to feed that story, because the stock market is not the economy, and realize that once the stock market gets to a level it feels it's okay and comfortable, then it will move back up. But you can't gauge that and assume it's just going to pop at 36 and be done with it. It could very easily butter it and get enough momentum. This is why reading price action is very important, and understanding events, because you see where the demand is and where the supply is, right? And you can see it when it reaches these zones and see if it's there or not. If it's not, we can continue just to keep selling, right? People don't want to put risk on because they don't know what's going to happen. And I think we're getting to that point to where, well, I'm not going to risk on if I don't know what's going to happen in the next 6 months. And Powell just told me that it's going to get horribly bad in the next 6 months. So why would I even invest? And so the masses will not invest. Institutions will not invest until they realize what is going on. And then when they get a clear path, then they'll come back in the market. And again, I think we could potentially see that this drop may last only a couple of days, maybe a couple of weeks. It really just depends on the momentum tomorrow. And then wait till earnings. Maybe we'll sell some, and then we'll kind of hold until we get earnings. And then earnings will be that next leg that we get, the next pin that pulls and pops, or maybe it's Russia and China, or maybe it's housing, right? And then is the next thing going to play out or not, right? There's a lot of what if scenarios. And again, this has been a year where we've had a lot of what if scenarios. I've never been in a situation where we've had so many what ifs. Typically it's just one, maybe two, but now the fact that you have 3, potentially 4, and other black swans out there that we aren't even aware of that can occur. with everything going on, that could make things 10 times even worse than they already are. So with all that being said, tomorrow, that's what I'm watching. So I'm watching for the retest, again, roughly around that 3,800. See if we can get that retest, and then potentially seeking all the way down to the 720 is where I'm looking at tomorrow. Again, if we break that, then you're looking at another clean about 60-point drop down into the 640s. And then that 36.36 is what I've been talking about, to see if we can break that 50 EMA monthly. If we break that, then again, the levels down here may be quick. If we do come down here, maybe a cascading effect, and maybe everything plays out and we continue to sell off faster when we get down here. I think if we do break this level, you might start getting some limit downs because you might induce panic. And then at that point, it might be one of those monthly wicks that just comes right back up, and then we start chopping around and back up in here again. I don't know. It just really depends on how everything pans out, and that's what you have to understand. It's not just going to go up, just it's not going to go up and down, right? There's daily events that occur that or data that happens, or something that happens that can pivot the market very quickly. So just be mindful of that. And that's what we got today. That's what we waited on today. That's what the market waited on. It got us information. Now this is that digestion. Nothing good, and we are selling. So again, watching those levels tomorrow. Bitcoin, there's no point. This thing is going to sell with the market. We are breaking a critical level. So I expect this thing to head down to 15 at least, potentially even lower. I get that another support around roughly around 11K, 10K. We'll see how that goes. I haven't really mapped anything lower than that. Again, I think anything under 10K is probably almost an insta buy at that point. But again, if the market wants to sell another 20, 30, 40%, Bitcoin could be back at 5K or under that. So just be mindful of that. So these support levels, it's going to be mindful to see where the price action is. Again, everything's going to look the same. It doesn't matter what asset you are in, it's going to come down. When the whole market, when the world goes into global recession, nothing matters, right? And this is why gold and silver are such a big thing, because, right, it's the one thing that everybody would agree upon that holds some value. But even during a market like this, right, it's down to basic necessities. People are more worried about a roof over their head and food and energy at this point. And when that's at risk, nothing else matters. No other asset matters at that point. You'll sell your fancy cars, your nice jewelry, whatever the case is, so that you can just provide your basic necessities. And that's what it's coming down to. And it could potentially get worse. And that's what's concerning. So again, Bitcoin, we'll see. Tesla, I called this out the other day, had an ascending wedge, broke out of it. Might get a little bit of a pump tomorrow, but then I think we're going to flush pretty heavy. Again, you got some support levels here at the 285, the 280, and then again, 260. I'm really wanting Tesla around 260 for earnings. I think we can at least visit this. Again, depending on how the panic is. If this thing does break, we're in for it. This has pretty much been our safe haven. Our safe haven starting to sell. If it starts selling heavy, and that means people are giving up and taking risk off. So watch Tesla. This is why I bring Tesla up all the time, because it's been a safe haven. So really watch Tesla and see how it does tomorrow. BA, again, something I talked about breakouts. Ascending wedges work very well in this market. Descending wedges do not. Like I said, you get that breakout and then retest, could pop back out. Highly doubtful. This thing, I think, is just going to go straight to the floor. 135 is what I'm looking at. Again, don't trade VA, but if you do, good luck to you. But it's not my cup of tea. Banks, big level for JPM. We need to see if it holds the 111. If this breaks below this, you got a massive drop here. And you have to understand that if banks drop heavy, the whole market is coming with it. Tech can only hold so much. And then again, if everything is selling, it really doesn't matter what you're in. It's all just going to sell. Goldman Sachs finally broke underneath. Support the 50. Watching this thing to really sell. Looking for a break at the 321 mark. Holding below that. So again, we got earnings on banks just around the corner. Again, which can induce a bigger break and a bigger drop in banks, which would, again, induce another bigger drop in the index in tech moving forward. So again, tech has been pushing lately, so it's got a lot more meat on the bone. So just be mindful of that. There might be bigger moves in tech. I'm going to play the index and Tesla mostly until I find levels that I like. But anything else that's holding, potentially Amazon. Amazon could have a huge drop here, back down to 101. Something to keep in mind. Google's already been selling really heavy. You could potentially look for a retest the 105. If it ever does get back to 105, that would be a great short, but it just hasn't had any strength. So this thing can continue to sell off. Not my first pick for tomorrow. I think the index SPX will have a huge gap and continue to run tomorrow. So it's just watching and seeing what you think is going to be the best play tomorrow. Apple has a lot of meat on the bone here. Watch this 150 mark. Depending where this opens tomorrow, I mean, if it gaps down to here, it might get a little bounce and then potentially break. But if it breaks to 150, you're going to get a big drop in Apple as well. That could be another really great short. Services have been doing really well. So this, I don't really know how much selling this is going to be doing, but it's been holding very high. So there could be a big gap down. You can get a gap fill potentially here to 160. So maybe 18-point drop tomorrow, maybe something you want to watch. You need a clean break of essentially the 171 and then get a little bit of a gap fill. And then you got another support here, roughly around the 148. So you get a couple more supports after you get this break, but it could have a nice gap fill on that one. Looking for the ones that have really kind of held up and see where they're at. NVIDIA, it's already been selling heavy. I don't know how much more of the chips are we going to sell. They can keep selling. Again, there have been markets like in 2008 where we got absolutely no bounce for days. So just keep that in mind, that we can continue to keep selling with no bounces. When your bounces are super weak, don't expect it to bounce. That's why any bounce I typically short when you get markets like this, because there's no playing to the upside, because it's going to die. There's no momentum. Unless you get a really strong one day, your second days are better. So I was talking about second days are better, and why tomorrow is going to be a perfect day, perfect setup for the short side. Today, you just got a small dose of that. Tomorrow will be a huge down day. You have to be prepared for that. If you're dollar cost averaging, I would probably wait a day or two and let this thing sell off. Let it sell off, see if it breaks before you DCA in. Because again, if it breaks 36.36, I think you're going to hit panic, and you could potentially start hitting limit downs at that point. And then who knows where we go from there. We may get another 20% on the index. So with all that being said, I appreciate you. If you've made it this far, go ahead and drop a like button. Until next time, I will see you guys later.